Hello and welcome to the session. Today we are going to talk about retail inventory method. Actually, retail inventory method is one of the method which we can use to estimate the cost of goods sold, and we can also use this method to calculate the cost of closing inventory. So overall, we can use a retail inventory method. We can also use average method. We can also use first in first out, last in first out, and we can also use specific identification method to determine the cost of goods sold and the value of closing inventory. But in this video I will cover retail inventory method. So retail inventory method is a very effective means of estimating inventory value. Like if you want to estimate the value of closing inventory, or even if you want to estimate the cost of goods sold, so you can use retail inventory method. And this retail inventory method is also allowed by US GAAP. Okay, and it can also be used for federal income tax purposes. And even this retail inventory method can be used by auditor, okay, as a analytical procedure if he want to estimate the value of closing inventory or cost of goods sold in shortcut. Okay, so that is why this is really important. So we have here few number of steps if you want to calculate the value of closing inventory or cost of goods sold. Before going into the calculation, so here we are assuming that company is maintaining records for all purchases and opening inventory, because if you will miss the data related to the opening inventory and purchases, so then maybe this method will not work. So this is what is assumption. So I will talk about the assumptions also, but here let's start the step number one in the calculation. The step number one is what? First we need to calculate the cost to retail ratio. Okay, this is actually a ratio. For example, if you are selling a product, any product, so of course you will have a cost of that product, maybe it is $50, and then you might have a retail price of that product, maybe it is $80. So this is what is called cost to retail ratio. How we will calculate the cost to retail ratio? So we will take cost of the product, let's assume it is $50, divided by retail price, let's assume it is $80, so multiply by 100. So this is how you will get the cost to retail ratio. So then once cost to retail ratio has calculated, so then you will calculate step number two. What we will do, we will calculate the cost of goods available for sale. And to calculate the cost of goods available for sale, so we need value of opening inventory plus we need value of purchases. So if you will add these two items, this is how you will get the cost of goods sold. And here, as I told you, we are assuming that we have maintained all the records related to inventory and purchases, especially opening inventory. Okay, so then the step number three, what you will do in step number three, we need to calculate the cost of goods sold. Now you can calculate the cost of goods sold. How? By applying this equation. So what you will do, you need a sales revenue, means a value of the sale, multiplied by cost to retail ratio, which you have calculated in the step number one. So if you will multiply the cost to retail ratio with the sale, so this will give you the cost of goods sold automatically. Okay, maybe in question if he is asking you to calculate the cost of goods sold, so this will be your answer. Okay, and the step number four, what you need to do, if you want to calculate the value of ending inventory, so this is what you need to follow. You will write here opening inventory plus purchases, it's called cost of goods available for sale, less cost of goods sold, which you have determined in step number three. So this is how you will get the ending inventory. And this could be the quick way to estimate the value of closing inventory. Okay, so here we have a small example to practice. Let's assume we have a cost of product A which is $50, and we have a sale price of product A which is $80. Here you have a cost of opening inventory $10,000. Okay, this is the cost. Okay, then you have a cost of purchases during the period is 20,000. Then you have a sale revenue during the period is $45,000. So now we will repeat those four steps. So step number one, we will calculate the cost to retail ratio, and the formula will be cost divided by retail price. So here the cost is 50 and retail price is 80, multiplied by 100, so it means cost to retail ratio is 62.50. That what you will do. Step number two, if you want to calculate the cost of goods available for sale, so here you will take opening inventory at cost. This is really important. Don't use here retail price of opening inventory. No, you will take opening inventory at cost. Okay, let's assume it is 10,000. Then you will take plus purchases at cost. For example, it is 20,000. So this is what is called cost of goods sold, cost of goods available for sale, which is 30,000. Now if you want to calculate the cost of goods sold, so what you need to do, you will write here sales multiply by cost to sale ratio. Okay, and sale value is given in the question 45,000, and cost to sale ratio is 62.5%, which you have calculated in the step number one. So this is how you will get the cost of goods sold, which is $28,125. Okay, and if you want to calculate the value of closing inventory, so you can calculate this way: opening inventory value at cost, which was 10,000, plus purchases at cost, which is 20,000. This is called cost of goods available for sale, which is 30,000, less cost of goods sold, which you have calculated in step number three, which is 28,125. If you will subtract this cost of goods sold from the cost of goods available for sale, you will automatically get ending inventory. Now here, maybe you are thinking, I have applied only this data only on one product. How to do if you are selling multi-product? So this is how you can do. First you will write the name of the product. Okay, because in the first step you need to determine the cost to sale ratio, and here you have different multi products, and their cost is different and their sale price is different. So what you will do here, you will write first name of product like ABC, then you will write their cost. For example, cost is 100, 120, whatever it is. So then next column you will write here retail prices also. So at the end you will make a total here. For example, here I'm assuming only, let's assume sum of the cost, I'm assuming only, let's assume $300, and the sum of retail price is $500. Okay, now you can calculate the cost to a retail ratio. Like you can take cost of as 300 divided by retail price is 500, and you can calculate it. I'm just assuming this value. Okay, and next process is the same. In the second stage you can calculate cost of goods available for sale. The third step you can calculate the cost of third step you can calculate the cost of goods sold, and in the fourth step you can calculate the value of ending inventory. Okay, I hope it is clear. So here we have a few assumption which you should remember. Note this, like this method, this is just an estimate. Okay, as an just an estimate, and does not account for items that are broken or stolen, because what we are doing here, we are taking information only from the records. Maybe you don't verify the goods physically here, so that is why maybe you have some inventory in records, but actually maybe it might be broken or stolen. Okay, so then second point is what, this method works best when the markup is consistent across the product. Like here we are assuming every product have same markup percentage. Okay, if different items have different markups, the end result won't be completely accurate. So this is what is the limitation of this method. I hope it is clear. If you really like the video, please don't forget subscribe to the channel. If you have any question, you can ask me through the comment section. See you in the next video. Bye bye.